Hello everybody, SeriousTrader. I'm back again today. Still talking about Forex trading, how to identify a good trading method. Today I'm going to focus on the last bullet point. And essentially I'm going to talk about what's called end-of-day trading. In my last video I shared with you that for any Forex method to be considered, first it needs to be a complete method. Second, it must teach specific risk management rules. And third, it should be based on technical analysis without being 100% mechanical or automated. Well, the last step in determining whether a Forex trading method should be considered is the amount of time it requires you to implement it or use it on a daily basis. The dirty secret in the Forex markets is that most people overtrade. They think they have to trade every day and every pair. And if they're not trading, either their method isn't working right or something's wrong, and they get frustrated, and this, of course, causes them to lose money. This also happens because Forex traders are widely taught that the only way to succeed in the markets is to day trade. Well, the truth to that dirty secret is that if the Forex trader can't make money trading Forex on an end-of-day basis, and he's unlikely to be any more successful day trading the Forex. In fact, growth among retail Forex traders is accelerating right now, and there are really the majority of these people have day jobs. So I don't see how it's possible for them to watch the markets on a 24-hour basis. What happens if they fall asleep and they miss putting in a protective stop order, or if they miss an entry point at 2:49 a.m.? There's no way to really be a day trader unless you're a professional day trader. So if you're a casual Forex trader, you do not want a day trading method. You're not going to be able to give the time to it that it needs, and you're not likely to be successful with it. Instead, I advocate trading Forex on what's called an end-of-day basis. This will help you to eliminate the stress and the time pressure to make instant decisions on order entry, immediate placement of stop orders, and that constant watching of the markets that day trading requires. So when you combine the technical indicators, and end-of-day trading is going to allow Forex traders more time to look at the big picture. For example, is there really a trend? Is my method right? Are my numbers and calculations correct? And it's much simpler to do this in the quieter trading hours following the New York close, which is 5 p.m. Eastern Time, or end of day. So just using a brief example here from March 2009, a recent chart on the Euro-USD pair showed a strong move from about 1.26 to 1.30. That's a 400 pip gain, and it took about 7 days to complete, and should have been captured by a good end-of-day trading method. However, that same chart would have shown a more extreme fluctuation as the price ranged sideways in a 200 pip channel in that same time frame, or just before that time frame. So if a Forex trader is trying to day trade in that channel, they can very easily find themselves on the wrong side of a trade in the more extreme short-term volatility. Whereas those who are in for a bit longer haul, an end-of-day trader has more time to assimilate what's happening in the markets. They're a little less exposed to that volatility, and the opportunity to grab those longer moves when they occur is a little greater. So Forex traders who don't have the time to commit to managing their trades and monitoring the markets are precisely the traders for whom an end-of-day Forex trading method based on technical analysis would be best suited. And in addition to that, I would argue that for a Forex method to be good, it should take less than an hour to apply after you've learned to trade with it. So if your method takes you 3, 4, 5 hours to go through the markets, it's too much time. You need something that can be easily applied and done so in less than an hour so that you can get on with the rest of your day or night, and then come back the next day and repeat the process. So that concludes the 4 keys to finding a good trading method or identifying a good trading method. To recap them, must be a complete method, must include risk management, should be based on technical analysis, and it should take less than an hour a day to apply. So that's our review. I hope you found the series helpful. I'm Serious Trader, and I wish you good trading in the Forex.